Okay. Back to the format. Anyways, so this opening inventory, just like I was saying, is the same as stock. I was explaining this aspect of the question. Now, 30th April, which is the end of the period, means that the period began somewhere from, you did taxation, it began somewhere from 1st May 2018. Okay. And then ended in 30th April 2019. It means that even if you don't see opening inventory and then you see them write attach the inventory, they can write inventory, then they put into brackets. Once they write inventory and they put into brackets the beginning date of the period, it makes it what? The opening inventory. So when they put their first 5/2018, you know the year began from that period to this year. So at the beginning period, this is the inventory they had. Now they can also decide to put their 30th April 2017, which means that it was at the end of the previous year, which was the closing inventory for the previous year, becomes the opening inventory for the current year. I normally tell students this because when we were in SHS, we were told that it can only be found in the trial balance. It was once I wrote an examination and I realized that they just put in there the date. And then my colleagues were using the one in the trial balance as the opening inventory. Meanwhile, the date there was meant for closing, and then the date in the additional information was meant for opening inventory. So open your eyes very well and appreciate it. Opening inventory simply means that beginning the period, how many goods did you have? It could be that the question said there were no goods at the beginning. It could be that there were goods at the beginning too as well. So it is dependent on the question that you have. All right. Now, when you are done with opening inventory, you go and add purchases. Now, it is because of purchases, I would say we should create 3 spaces for the Ghana series. Why? Because there might be an adjustment on purchases that we can do right under the 3rd column. Now, what is under purchases? You can have what we call, so when you see the add purchases, we put in an column. During the purchase of the item, the inventory, maybe you brought the item into, someone helped you. So we call carriage inwards. When you were bringing the goods in. So it's an expense that you need to add to the purchases. Whatever you get, you come and less what we call return outwards. Why? Because you might not like some of the items. So you would want to return it. So we call it purchases return or return outwards. You might not like some of the items, so you would want to take it back to the owner. So just like we have sales return, you can have purchases return. Now, this 2 gives us what we call the net purchases. These 3 items gives us what we call the net purchases. Okay, so I am saying that the purchases figure plus the carriage inwards should give me 1, 2, 3, 4, meaning I've added it. And then when I come and less the return from it, I should get what we call my net purchases. That net purchases must be added to the opening inventory if only there is opening inventory. So we add the net purchases to the opening inventory. Once I add it, I don't have a name to call it now. But then I'll come and less what we call the closing inventory. Less closing inventory. Or closing stock, which normally people will say is in the footnotes. Now, when I less closing inventory from the addition of the purchases, and then I would get what we call, oh, why is my network messing up this evening? What is wrong with my network? Guys, a minute, please. I want to confirm what is wrong with my network. So it's fine too. All right. So when I add this to this, when I take this closing inventory from this, what I have is what's cost of good, cost of sale or cost of goods available for sale. So we call it cost of goods available for sale. Or cost of goods sold. Cost of goods or cost of sales. Let's call it cost of sales. It's the same as the cost of sales. Now, it is this cost of sales that we must less from our revenue. So let's assume our revenue is here. 1, 2, 1, 1, 2, 3, 4, 5. Then I took out my just from it 1, 2. When I took it from it, I had 1, 2, 3. Okay, so I have 3 left. Okay, so I'm expected to take this cost of sales. This cost of sales. So here is supposed to be the B minus A, where the B is my net sales, and then my A is my cost of sales. When I take it from it, the final answer that I would have, which is 1, comes in to be my gross profit. So gross profit basically is these items that you have. Now, mind you, that the new IAS that we have talks about recognizing depreciation as part of your cost of sales. But until the question tells you recognize depreciation as part of cost of sales, you are not supposed to charge depreciation there. Now, at your level, I don't know if such a question have seen it before, but then it means that anytime you are giving the question, you need to check where you are charging cost of sales. It is in level 400, I've seen it, but then I've not seen it yet with you people. Okay, so what I'm just trying to tell you is that if depreciation will come in, you need to come and charge depreciation. You just come and less it or add it back. You add it here to so you can less it and then have your gross profit. But then all things being equal, that's just the basic standard for everybody to know. Then after gross profit, you add other incomes. What are some of the incomes that you can have? So that one will be question specific. All this time you'll be making allowances. So when you get to gross profit, you can leave about 2 lines before you do the gross profit. Then when you come to the income, you can also leave about 2 or 3 lines. You don't know the number of incomes that are there. If you go and then there are no incomes, you leave it and then you do your operating expenses. So you can also decide to read the question thoroughly before you start. So once you are done, you less operating expenses. Now, the cost of sales, everything here is also called the direct expenses. So if I less my direct expenses, which is the cost of sales from my revenue, it gives me my gross profit. Then my operating expenses are my indirect expenses. My indirect expenses. You know that one is question specific. You can have, so let me write some examples of other incomes. You have rent received, interest received, discount received. So all those that have received, the word is received, not receivable. Receivable is an asset, but received means that it has been received and is an income. Then operating expenses, you can have wages and salaries. That one is question specific. So know your expenses and know how to write them here. So once you are done lessening your operating expenses, you get your net profit. Now, after the net profit, the only thing you don't treat under expenses again is interest. So you now come and less your interest. So this is net profits before interest and tax. Then you now come and less your interest. The interest now is called finance cost. But for those who are actually used to the word interest, you can use interest. But the interest that you pay is what we call the finance cost. Okay. Once you less the interest, you get net profit after interest or net profit before tax. You get your net profit before tax. Then you charge the tax in the question to give you a net profit after tax. So taxation, you make allowance, tax, then you come and do what we call your net profit after tax. So that has been, or this is the format for the income statement. Any question with that format? This is JHS format. This format is basically for JHS and SHS students. You are growing. So if I want to give you the exact format for it, you might break down and then ask me lots of questions. Because in the exact format that we use when you are going forward, this is for ticks. The exact format that you use, though it starts with the same as sales, you just pick the sales figure and then you go and do your workings. So normally I advise students that, you see here, you also make room for what we call notes to the account, notes. So if you go and do your workings for maybe purchases and you want to bring it here, you call it workings number 2. You come and write here 2. So everybody knows that anyone that is marking your script knows that you did some workings. So normally workings, we create space for the workings. So once you write the format for the first page for income statement, second page for the balance sheet, then the third page will now be for your workings. So now you read through the question, you do the workings, and you'll be feeding the format. So you are supposed to do the format first, then you now go and do the workings. Now, even if you don't complete the format, you don't put in figures there and then you've written the format, you are likely to get some ticks because it is the workings that you need to come and feed it. If you start with the workings and you're unable to complete the workings, what time would you need to come and write down the format? All right. So having said that, you start by writing some workings or notes. Some of us will do notes. There may be, you say note 1 is for sales. So some of us will do note 1 sales, and that is when they will come and write the sales figure. So that is the new way of preparing this. But then just for text, you can go and any of them is going to give you maths. Less sales returns, and then we'll get our net sales. All right. So once I do this, when I get to the statement, I don't need to repeat all of these things. All I need to repeat is just sales and then write the note 1 and then bring the figure that I have from my workings in there. Who is confused? Who is confused? You're okay. Are you okay?
Yeah.
All right. Okay. So if you're okay, that's fine. So you can also go and do your cost of sales. So you write note 2, you start say cost of sales, and that you can also do your workings here. So it starts with opening inventory, add purchases, and all that. Now, once you are done, it's just the final figure that you bring there. So under cost of sales, maybe you do all of these workings. When you're done, the final figure, you just come and put it beside cost of sales. And then you come and do your operating expenses or other incomes. You do the workings, you present it there. So your format would have been simple. It would have been just sales, less cost of sales, add other incomes. Then you come and say less operating expenses. The workings are here to back the format. Okay. We'll talk about that one in the other world, not here. This is a fresh world that we are in. Okay, so I'll use this format over and over and over and over again. Now, after writing this, I said you go to the next sheet, and then what would you do in the next sheet? You start what we call the statement of financial position, and that is assets, statement of financial position, what you call balance sheet, financial position as at 30th September 2019. You can still write the company's name again, Kofi what? Bedu also. Is it Bedu? In the books of Kofi Bedu. Because it's on a fresh sheet. Now, I know your lecturer has taught you the PPE schedule. Please, if you have forgotten, fine. If you haven't, fine. Whichever one is fine. All I need you to do is to learn it. Okay, because we have stopped doing preparing financial statement, and we will do what we call cost depreciation, and then we'll come and write net book value. That is SHS style. Okay, we have stopped doing that. So you take it to the workings and then you go and solve it. So you come and do what we call the PPE schedule. Now it is not difficult. This is how the PPE schedule works. You start by writing the cost in the statement in your trial balance, or the cost of the asset. Then you add additions for the period. So let's assume we have motor vehicle, we have assets like equipment. You know what constitutes the PPE. We have motor vehicles, we have fixtures and furnitures, and all that have you. So we have FNF, we have land buildings. So the land is not, land will be there, but then what you need to know is that you need to separate the land from the building. Okay. Then maybe after listing everything, you put here total. That is what we have then. Now you write the cost of the item. You now add additions. If you purchased any of the assets during the year, you add them to it. If you received donations, I don't know why I'm teaching you these donations, but then this is for public sector accounting. But then in case you receive anything with respect to the asset during the year, you add it. And then you come and do what we call prior year adjustment. Okay. Now, this is basically going to talk about maybe during the year you bought an asset, but it was recorded as an expense. And then you are going to do the adjustment. You are going to return it back into the asset account. This is where it comes. So in case you bought maybe a motor vehicle, but it was treated as maybe books in your expenses account, you need to go and then credit the book account and debit the motor vehicle account with the assets that you bought during the period. And that is what we call the prior adjustment. So that error had occurred during the before the beginning of the year. So we need to add it to it. Now this gives us a total. Okay. Now after doing the total, it is now that you come and focus on the depreciation. Now, every prior year adjustment has a depreciation. So if there is any prior adjustment and we are going to do the analysis, there will definitely be a depreciation. So we need to come and write that depreciation down. So depreciation for prior adjustment. Then we'll come and write down our accumulated depreciations, which is normally given to us in the financial statement. Accumulated depreciation. Now, after the accumulated depreciation, then we'll now do the depreciation for the year. Now, look at how the depreciation for the year works like. This is just the PPE schedule. Depreciation for the year, if it is percentages, it is percentages of the total. So let's assume the total here is A. It is the percentages of the total A. That is what we call the depreciation for the year. So now that depreciation for the year is what will be sent to our income statement. So the total here for depreciation for the year must be sent to our income statement. And then we'll come and find the total for the depreciation. We'll add the prior year adjustment, we'll add accumulated depreciation, and we'll add this to it, and then we'll call it B. Now, when we call it B, so that is also total for the depreciation. For depreciation, entire depreciation. Then we'll come and find the written down value of the assets, written down value of the assets. Okay. Now that is basically the A minus B, the total cost of the asset minus the depreciation that you found. And that is what you send to the balance sheet. So the yellow is sent to P or L. And then this one, which will be color green, let me say blue, must be sent to the statement of financial positions, SOFP, statement of financial position. Okay, so this is how it works with the PPE schedule. Now, it is this figure that you pick and then come and dump here for the PPE. So we don't need this cost depreciation and all that. So once I come here, the first thing I pick is PPE. Even if I'm not going to pick PPE, I'm going to pick them asset by asset. I'll just write the asset here, motor vehicle. I'll write it here and I'll pick its figure. And I can write the furnitures and fittings and I'll write the figure for the written down value. Then I pick the building and I write the written down value. And I'll pick the land and I also write the written down value for it as well. Okay. You can also do that or pick the total. Okay. Then you know what follows. So this starts with non-current asset, which is a PP asset that will take more than 1 year. And then they start with maybe motor vehicles. You can go ahead with the PPE schedule if you want to. Motor vehicle, it is a written down value. You can also go in for the FNFs that you see in the question. So it depends on it. Then you come to your current asset. You make allowances. When I say allowance, I mean you leave some space. Current assets. What are the current assets that you can talk about? You can talk about inventory. Be mindful, closing inventory. Closing inventory. Okay. What else again can we find there? Anyone? 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 What else again? Closing inventory, cash and what? Bank or cash and cash equivalent?
Bank.
Cash and cash equivalent. Uh, someone will see. Someone wanted to mention something. Mention it.
Receivable.
Receivables,
Debtors.
debtors,
Receivables.
receivables.
Prepaid.
Prepayment is
Prepaid.
prepayment. And then what again can you see? Okay, so we have the banks. Now be mindful. If you look at the trial balance and the bank is on the debit side, what is it communicating? It means that it is an asset. But if it is on the credit side, it means it is an what? Overdraft. It is an overdraft. If it is on the credit side, it is an overdraft, which is a liability. It becomes an overdraft. It becomes an overdraft and it's a liability. But then if it is on the debit side, it is the asset that we are talking about. Okay. All right. So, if I want to write the format for you, I'll go on and on and on. But then this current asset, current liabilities, you leave one full space, and it's going to be question specific. There's going to be question specific. Okay. Now, having said that, ladies and gentlemen, let us try and solve the question that we have. Okay. Let us try and solve the question that we have. I think that will enhance your understanding in the question. I need a reader. I need a scholar who has been like me to read, please. Hey, obi amben ye won. My family dear sir. Okay. Kofi Bedu, a sole trader, extracted the following trial
So
balance.
I want to read.
You wanted to read, and I've been waiting for you for like 6 years. Please read for us.
Sorry, my positioning myself well.
All right, please read for us. Please read. Hey, am I the one not hearing her? She's the one not hearing me. Hello?
Hey, sorry, hear you. Sorry.
Hello, everybody. Am I the one not
Kofi
hearing her? She's the one not hearing me.
I can hear you. Can I please go on?
Oh, yes. I'm waiting for you. I want to know if I'm the one challenging the network because you are not frequent. But you can go on. I'm listening.
Kofi Bedu, a sole trader, extracted the following trial of the business books as at 30th April 2019. Sales 230,150. Sales return debit 210. Purchase 96,100. Purchases return credit 1,000. Page out was debit 80. Discount allowed